In case you haven't heard, federal student loan payments will resume on October 1, 2023, after a 3-year administrative forbearance put in place during the onset of COVID of 2020. And if you have student loans and you'll give me about 10 minutes of your time, I'll give you a ton of information on what you can do to help this situation. So first, let's understand how we got here. The Fiscal Responsibility Act of 2023 that was signed into law June 3rd due to the negotiations in Congress regarding the debt ceiling, part of the agreement was that student pause would end. Loan forgiveness programs brought forth by the Biden administration recently were also a no-go due to the Supreme Court striking these down on June 30th. So as a result, here are the key dates that you need to know. So September 1st, loan invoices started going out in collection attempts for those currently in default. October 1, loan payments are going to start being due. And November 1st, payments not received are going to be considered late. And here's some key facts of student loans. So approximately 49 million Americans have student loan debt. 29 million of those Americans are between the ages of 29 and 50 years old. The average balance owed is roughly $38,000. So that equates to about $1.6 trillion in total student loan debt. That is going to affect 1 in 3 people in the U.S. workforce. They're going to have their payments resumed. And the average monthly payment of $300 is going to be added to the budget. So let's be honest, if you haven't been making student loan payments, these are likely out of sight, out of mind, and many have replaced the monthly payments prior to March 20th to cards, credit cards, mortgages, and other types of debt. And it's no secret that the last couple of years have been characterized for just about higher costs for everything we buy or consume. So where exactly is your pie of income? Are your student loans going to fit into your monthly budget? And what has to be sacrificed to make them fit? While late payments on student loans and in default will be catastrophic to those that fall into these main groups, those looking to buy their first home, those looking to buy a bigger home, or those looking to consolidate their debt through home equity, my goal here is to educate and inform you that there are options available. So to prepare for this change, you're going to need a plan, and I recommend that you act on that plan as soon as possible. 1, you need to know what your options are. 2, you need to create a plan of attack to take advantage of those options. And lastly, you need to execute your plan to put you and your family in the best possible financial shape. I want to give you a warning, however, of what not to do. You don't want to refinance your student loans with a private student loan company or a private lender. While the private lender may advertise a teaser rate to get you interested, this rate is likely adjustable and may not even be available to you unless you have perfect credit. There are also higher costs traditionally to these loans. Read the fine print closely, and once you refinance from federal to private, you can never go back to federal, and you may miss out on income-based or debt forgiveness opportunities. Now that we've gotten that out of the way, I have a very helpful calculator where you can calculate how much you can save on your upcoming payments. Please keep in mind that it's specific to federal student loans, not private student loans. You will find a link to the calculator to the right slide bar of this video if you're watching on your computer, or below this video if you're watching on your smartphone. The loan calculator is really, really simple to use. Input your loan data, such as your gross income, student loan data, and you might need to visit your student loan servicer website before using the calculator so you know exactly what your payments will be once they are unpaused in October. Second, the calculator is going to instantly give you what your monthly payments will look like and how to take advantage of those savings. But you don't want to stop there. You can then pivot and take your newfound monthly savings and apply them to the home buying or refinancing process to improve your financial situation for your family. Sorry. So I want to tell you a story. I had a client come to me. She had already reconsolidated all her student loans from federal to private. She worked for the state of California, and she'd been in her job for 7 years. She consolidated from federal to private, and her payments went to $4,200 a month. I put the same information into my calculator. Her payments would have been $1,400 a month should she have stayed with federal. What really hurt her was because she went to private, she is not going to get any debt forgiveness. She would have been eligible for debt forgiveness after 10 years. So that means 3 more years and all her student loan debt would have been gone because she is a federal worker. But because she went into private, she loses out on that. So the ultimate goal of any option that lowers your monthly payment on student loans is to increase your buying power or borrowing power. This happens by decreasing your debt to income ratio, also known as the DTI. This is the amount your monthly payments for mortgages, installment loans, student loans, minimum revolving credit payments divided by your gross monthly income, which is before taxes. This ratio is determined to the amount of mortgage money you can qualify for. So for that first-time homebuyer that tends to be a young adult and has dealt with higher educational costs than those that attended college years before, has increased student loans that can actually be very crippling. And when you increase your buying power by lowering your student loan payments, I can then examine your options and show you how much more house you can afford by using a tool that we call the total cost analysis, a TCA for short. And it will show you what a mortgage will cost you for the time you plan to use it. And as a first-time home buyer, you may not be aware, but few people actually hold a mortgage for the term of the loan. They may choose to pay it off, sell the home, or refinance. And as a case in point, the average hold time for a 30-year loan is less than 7 years. Next, if you're a first-time home buyer that aspires to move up to a bigger, better house for your family's needs or to create an additional income stream by converting your existing primary residence into a rental property, I can show you how your student loan savings would be applied, preparing you for that next house, increasing your buying power. And also I can show you in the TCA how bringing a permanent or temporary rate buy down into your overall offer strategy will improve more so your monthly payments and your buying power. So let's get to the bottom line. While there's nothing that anyone can do to stop the resumption of monthly student loan payments, I can show you a plan on how to create and execute to address them. Doing nothing is certainly an option, but is it your best option? Much like a financial planner's job is to protect and grow your assets, as a mortgage advisor, it is my job to educate you on the best strategies that are available to you. Why is this important? Well, this will not only assist you in qualifying for what will be one of the largest tools for building you and your family's wealth, which is your home, but also to share with you strategies to ensure that you are leveraging that asset correctly to make sure that more of your money can be allocated to growing your assets and not to be eaten alive by your debts. Once you execute the plan, I will make it super simple. Once you have the calculator, which I've shared to you earlier in this video to determine how much you can save on your monthly student loan payments, your first step is to click and schedule a call on the top of my webpage so we can begin the conversation and we can evaluate your plan of action. Please click the schedule now and begin the conversation so I can run and analyze your data and see if there's any way we can improve your situation.